Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to the CNBC TV18 special. I'm Shereen Bhan and we're coming to you from the Kotak Mahindra headquarters in Mumbai. This is our annual chat with Uday Kotak ahead of the Kotak Institutional Equities Chasing Growth Conference 2018. Mr. Kotak, always a pleasure. Thanks very much for joining us here on CNBC TV18. You know, I remember having a chat with you in exactly the same spot last year, and we were talking about the governance premium that India enjoys. In light of what we're seeing happen today, specifically with the public sector banking stocks and its after effect on corporate India in general, do you believe that there is a loss of that governance premium?
I think what's happening in India now from the point of view of institutional investors and investors in general is that the number of companies which would get governance premium would narrow. And I think India overall has to really do a series of things to ensure that we don't get governance discount. And in that context, I'm happy that on behalf of a committee which was formed by SEBI, which I had the privilege of chairing, we have submitted our corporate governance report, and we are awaiting the government and SEBI to take the next steps on that towards a better governed corporate India.
Do you think that there is a need for urgency today? And you know, I remember listening to what you had to say in Delhi a couple of days ago, where you said that as a banker you stand ashamed about what has happened as far as the NPA situation is concerned and how the NPA situation has gone out of control, so to speak. You said you were embarrassed, you were ashamed. Again, I ask you this in light of what we've seen happen, because it's not just negligence. It seems to point towards complicity.
You know, I continue to believe that I am embarrassed as a banker and even more as a part of the financial sector in terms of what has happened in India, especially based on the reports as of now, which is in addition to the whole issue about stress in the financial sector. I think we have to really think about two major areas of the future for banking and finance. That is around governance and ownership of banks in India. And we have talked about it. I think the time has come now for a significant policy and institutional thinking on that rather than more talk. There's a hell of a lot of talk which has gone on. And without pointing fingers, which seems to be the name of the game right now, whether it is the regulator or the banker or anybody else, I think the focus has to be to find institutional framework and a policy kind of approach to fixing some of the key issues in Indian banking.
So what is the answer then? Is privatization the answer? Do you believe that that is the best way forward to address this problem, that this rot that we're seeing, which continues irrespective of who's in government? I
think you have really three issues. Number one is governance. So you just need to step up the levels of governance of all institutional mechanisms, certainly banks, but also the system around it. Therefore, each player in the system has to be doing his or her duty. So you really need to strengthen the institutional framework under which Indian financial sector operates. Number two, for listed companies, a significant improvement in how we run our listed companies. And this is back to my view that if you don't own 100% of a company, you have, even if one share is held by somebody else, it's not the company of that particular individual, and it has to get all the fiduciary aspects in place. And you know, we have to constantly strengthen our institutional mechanisms. I was reading a report in, I think, one of the newspapers, which was on institutional frameworks in some of our constitutional institutions. And I think it was talking about the Supreme Court, the Election Commissioner, Election Commission, the RBI. These are all what I would call as the custodians of Indian faith. And a constant nurturing of these institutions in addition to the specific banks is the key for our future.
Let me talk to you about chasing growth, because that is the theme for your conference. You started by talking about the fear of the governance premium shifting to a governance discount. Has the mood soured somewhat? I mean, of course, on account of global factors, local factors, the change as far as macros are concerned, but more so because of the trigger that we've just seen.
No, Shereen, you go back to January, early January, I did speak out about the fact that I was worried about
the possibility of a bubble in the mid-cap side, yes.
In a few stocks, particularly small and mid-cap. So I am glad that the markets have corrected since then, because otherwise you were just seeing first-time savers' monies going into the equity markets in some of the stocks, which could be very easily manipulated as well. So I'm happy from the point of view of longer-term system that the correction has happened. Let me move to fundamental valuations and then to economic growth. I think fundamental valuations are in the process of correction, and we will reach equilibrium at some point of time on a fundamental basis. We are probably still a little away.
What would be a healthy correction?
I think we have seen a close to 8 to 10% correction in the big caps, and probably a 20 to 30% correction in the small and mid caps. So somewhere in the single digit corrections from here is what I would, in the big caps, is what I would see as getting the markets to a fundamentally more healthy level. Now, whether there's 5%, 10%, I think that's something which would give fundamental corrections. But keep in mind, beyond fundamentals, technicals can move markets on either side quite a bit. And fundamentals are not static as well. It also depends on a lot of changing factors. So you've got to keep on moving your fundamental value with the changes. The good news, as I see it today, okay, is over the last 3 or 4 years, whenever we would talk about chasing growth, we had a wonderful macroeconomic tailwind in our favor. You know, oil, we've seen it at $30, $40, $50, and our current account under control, fiscal deficit improving year after year. So we had a wonderful macro for the first 3 to 4 years post 2014. But micro was lagging the macro. This time around, as I speak to you, I think micro has picked up. We are seeing growth on the ground, but the macro tailwinds are not as favorable as they were over the last 3 years. But I don't think macro has got very adverse, so I think there's still enough room for growth. And micro is chugging much better. So from a good macro to a challenging micro, we've moved to a good micro and a more challenging macro.
So, but is the good micro enough to offset the challenging macro, and also then, improve India's performance vis-a-vis other markets? Because today we are underperforming other emerging markets and other global markets.
No, I see. My view is India also did very well in 2017. So we are giving up some of the wonderful gains we got last year. And I would be much less concerned about where we are doing vis-a-vis others. Finally, we got to draw our own future. And I think we also got to keep in mind that markets, as we go forward, will want to price in what they see as the political outcomes in 2019. The current base case of the markets as it stands today is that the NDA government in some shape or form comes back. However, as the 2018 rolls forward, markets will still begin to evaluate this as well. Therefore, in addition to macro, the politics is a factor in the context of a significantly improving micro.
So what does that mean in terms of flows then? If you're saying that the market is also going to start to factor in the outcomes of crucial state elections and of course the big general election in 2019, and there could be a repeat of the performance that we saw in when this government came to power, or it may be a different story, we don't know. But what is that going to mean both in terms of domestic flows as well as foreign flows?
I think we've got to see the time. The good news, as I see it, from the point of view of being a practitioner in India over the last many, many years, is a statement which I always make, that at any point of time, India looks challenging as a photograph. But India is wonderful as a movie. Therefore, if you're invested in the movie called India, just stay the course.
Which are the sectors that you believe, despite the fact that valuations may look stretched, etc., that still have growth potential?
No, right now, as we see it, we're seeing very good growth in road construction. We are seeing pickup in the activities around construction equipment. We are beginning to see this year also rural India, especially on our tractor financing and businesses like that, seeing some pickup.
But how does that then correspond with the stories of rural distress and agrarian distress that we're picking up on?
I think very often we mix rural and agriculture as one-to-one correlation. Rural economy is also getting broader. Therefore, there may be pockets where there may be challenges in agriculture. But the broader rural economy story this year is looking better. And then you got, I think, the auto sector in totality also looking pretty robust. I'm seeing companies begin to do brownfield investments as well. May not be enough greenfield. And then finally, if the declogging of the system happens through NCLT, I think that should be helpful. Yes, I think haircuts will be there. I think the first few results on the steel companies seem to be good, but that is not the average. So while the haircuts will be there, at least we will hopefully in 2018 declog the system.
What do you make of the bids that have come in for companies like Bhushan Steel, etc.? You talked about steel, and you said that, you know, the kind of haircuts that we're possibly likely to see, at least for the steel sector, may not mirror what we may see on other assets. But what do you make of the kind of bids that we've seen come in, at least for the steel side?
Based on whatever media information which is available, I think it's good news, especially on the steel sector. But don't make your averages based on those bids.
But do you feel confident that we are going to see that declogging now over the next few months?
My sense, if I take the overall average of the system, I think on the resolution side, in terms of how the NCLT process is working, we are assuming a base case settlement for most of the larger assets at an average of around 40% of the principal amount, which means a haircut of around 60% on an average. But there is another major development, which, as you are aware, is the new guidelines of RBI on reporting on SMA 0, 1 and 2. And I believe that will front end the recognition process even further.
Every few weeks when we talk to bankers and ask them, is the worst over? The response is the worst is over. And yet we're talking about a situation where you see that clearly that's not the case.
Shereen, you've been talking to bankers for 24 months and they've been saying worst is over for the last 34 months. So, but that is the reality. Having said that, you know, I think we also need to step up our standards of, you know, disclosure and governance. For example, we at Kotak took a decision more than a year ago that we will report SMA 2 to the markets, which is anything which is more than 60 days overdue. We report to the markets every quarter. And we are probably the only bank which does that. So as you move down this path, I think greater transparency and consistent with the discussion we had on governance is going to be key. And be paranoid about risk management. If there's one thing which worries me every night when I go to sleep, and this is not today, this is for the last 10 or 15 years, is will I have a bank next morning? Because that's all it takes to wipe out a financial institution from the face of the earth.
Let me then ask you about what the pipeline, especially when it comes to the IPOs, is looking like.
The fundamental structural story is fine, but bankers, analysts and investors should be doing a lot more homework to ensure that they're bringing quality into the markets. Because the last thing an investment banker wants is to be stuck with an IPO which has some smell around it. And especially in the context of recent events, bankers need to dramatically up their due diligence.
Can we expect 2018 to be a year where you play consolidator?
Shereen, every year you ask this question in January and get me into trouble. So I will stick to the line, and which has turned out to be right for 2017, and which is that we are always open for opportunity, and it's across the financial services industry.
Including NBFCs.
We are, financial services industry is the broad financial services industry. Having said that, we are very focused on creating value for our stakeholders, and we will not rush into do stupid deals.
But do you get a sense on the basis of what is on your deck today that whether it's valuations, whether it's strategic fit, that there are potential targets there that look attractive to you?
No. I mean, I think the Indian financial sector is a long-term phenomenal opportunity. And therefore, the overall financial sector is something we like. I've spent my life in it, and we continue to be deeply committed to the sector.
And I ask you this question every time we meet, but any more clarity now on the shareholding and how you bring that down?
No, Shereen, we are evaluating all options, and whenever we have something to share, we will certainly do it with you.
Well, that was the answer I was expecting. But let me ask you about a chat that we had in Davos, and this has to do with your comments on foreign direct investment into the banking space. Once again, the buzz is picking up that post the government's decision on recapitalization, maybe this is going to be the next move. I don't know if you've heard anything about it or not, but have you had any representation with anyone in government on the issue?
I think we as a country have to decide what is the policy we want. Okay, and the answer is we have. If you take the top 5 private sector banks in India, 4 out of the 5 have majority foreign ownership, and they're perfectly fine within the law. But we all know that finally the voting is decided by 2 or significantly influenced by 2 global proxy advisories, which is Glass Lewis and ISS. For diversified, so-called diversified shareholding is not a panacea for effective implementation of significant control in voting. So that is one
You've
reality.
publicly raised your concerns, but have you raised your concerns with the government?
No, I think, I'm sure everyone, all policymakers are aware, and therefore as we go through it, and the question we have to ask is, as government ownership is something which is a matter of great debate right now, whether it happens now, post-2019, what do we want? We want the Indian banking sector to effectively have disproportionate foreign control, or are we going to think about a future where we believe that India in financial services has an ability to keep it at least competitive for domestic owners to make a play at it? And that's a much deeper question, and I'm not a believer of protectionism, but we should have a situation where we are able to build banking and still have the liberty of calling it Indian banking.
Do you believe that 2018 will continue to be a space where insurance is going to be a big play?
Insurance is also going to be a part of the potential consolidation play. But what you've got to look at in insurance is there's a manufacturing part of insurance and there's a distribution part of insurance. And at this stage, the stakes are much more loaded in favor of distribution. And therefore, how this insurance play happens is a combination of the product part of insurance and the distribution part of insurance.
What would be your single biggest concern?
See, again, it depends on the time frame. If I look at a 2, 3, 5-year perspective for India's growth story, I think India needs to make sure that we are a liberal economic, markets-based growth story with the right regulatory checks which are supporting fair play and transparency. But
implicit in that comment seems to be that we're not.
I'm not saying that. I'm not saying that. I'm saying this is how I really would like to see India's future, and where institutions and processes and policy based on sound fundamentals are the basis of how we govern our future.
But let me ask you about the recent moves that we've seen when it comes to the customs duties that were hiked in the budget. Do you believe that for all our talk of opening ourselves up to the world, on some level we're also sort of becoming a lot more protectionist?
I think one has to look at this carefully. I would like to believe that this is more a short-term measure to really protect ourselves from potential dumping from China, where I think if it is a state-sponsored dumping, we need to make sure that we have got our counters. But on a broader basis, my medium-term philosophy is liberal order, free markets, competitive environment, and robust regulatory mechanisms not based on, or policy mechanisms not based on what is populist talk packaged as public interest, but real fundamental change which affects lives and the futures of Indians.
I'll end by quoting you back to you. You said that risk mitigation is something that keeps you up at night. What about the disruption on account of technology. I mean, we now have WhatsApp Pay here in India, and you know that's got the potential of being a game changer. So how much of that is keeping you up at night?
When I say that I keep awake at night with whether I'll have a bank next morning, I think it could be on 2 counts. One is security, and the second is a Google or a Facebook having invaded the banking space.
They're already here.
So we have to be paranoid on both counts, and we've got to move at great speed on both these areas. But keep in mind that as we push faster on the technology front, and if I can use a phrase, as we move swiftly on the technology front, we've got to be...
Swift is not necessarily the best choice of words.
We have got to be careful that we are really getting our security aspect as well right.
Uday Kotak, it's always a pleasure speaking with you. Thank you very much for joining us, and we wish you the very best of luck with your Chasing Growth 2008 conference. Always a pleasure.
Thank you very much, Shereen.
With that, it is time for us to wrap up this CNBC TV18 special from all of us here. Goodbye. Many thanks for watching.